Day 2 of a government shutdown. You would expect, well, maybe mortgage rates to get a little bit better, but would you expect the Dow Jones, S&P, Russell 2000, NASDAQ, Bitcoin, all hitting record highs during a government shutdown? That's crazy. So what's going to happen next to these? Well, if you're watching this video, most likely you're looking to buy or refinance. So my goal here is to try to explain to you what's going on with these and the whys behind it. So folks, let's get to today's news. So here's what we're seeing in the markets. We got day 2 of the government shutdown, and what happens? Well, we got all these indices all the way across the board, record highs. We got the VIX behind my head, really not much up. It's at 16. That's saying the anxiety levels on Wall Street pretty calm as well. Cryptocurrencies is all-time high, I think, here as well. And then you got oil, which is helping inflation at $60 a barrel. Is it going to go into the 59 range? That could be huge when it comes to inflation. So if you look at all the details behind all this, it looks like a feeding frenzy. So folks, here's what we got going on. We have a government shutdown. And everybody's saying if it goes past 2 weeks, well, we don't know how long it's going to go. So you have to be ready, be cautious. Okay, so what I'm going to talk to you guys about in today's video is basically being ready and being cautious. Because here's what we got coming down the road. And I'm not trying to be fear-mongering. I'm just trying to get you guys set up in a good position. Is we have the government shutdown. How long is it going to last? Well, they keep coming out saying, well, it's probably going to be short-lived. In the past, nothing like this has ever happened. We've never had a situation like we're in now. So I'll leave it at that on the political side of things. So how long can this last? We don't know. So when you start seeing all these things coming out, and then you see that's coming down the pike, and then we also have tariffs. Remember tariffs? They're still on the sidelines. Are they going to be deemed legal or illegal? Then we have a jobs market that's didn't look good at the last reading. Where's the reading's going to come in now? Well, when's the next reading going to come in? We don't know. So how's all these numbers going to come in? That's what we don't really know. So what I want to focus in on at this point is I think the markets are a little bit frothy. I want to be careful and be ready. So let's make sure you're ready. If you're out there looking to buy, be cautious. Maybe you look at a rate at 6.5%, 7%, making sure you can qualify at those rates just to make sure, if you're building a house, making sure by the time you get into that, you might be prepared for that payment. And then if you're lucky, hopefully rates will be where they are now or maybe a little bit lower. If you're looking to refinance, we got a brand new tool for you called Rate Watch 2.0. So I'm going to get to that in a second. But let's get over to see what the market's doing. We just went through that. Here's the bond market that we follow. So what I want to show you right now is this, because we really have no financial data coming in. We got the ADP payroll numbers coming in yesterday. This number over here, where it says negative 3,000, this was a positive, I think it was like 58,000. So this wasn't only in negative 3,000. It was a huge revision. And then they said it was going to be about 52,000, and they missed that again too. Huge miss. So what they're saying is, well, these were revisions that we made and all this other stuff. That's the last data point that we have on the employment numbers. And we know employment's important to the Fed because they came out last time and said, well, that's the most important thing going on right now. So let's go back to what we're looking at. The Federal Reserve, they're going to cut rates. Well, in 26 days, the probability of that is, we'll go through here, it's probably 100%. 97, it was 99 earlier. It's still 90% almost at the next meeting. So we know the Federal Reserve is going to cut. But once everything comes back to fruition, we haven't addressed the deficit. We haven't addressed the bad jobs reports that are coming in. We're not going to get any additional feed on the GDP and production and things like that. So we're going to be flying blind for a little bit. So again, I don't know where rates are going to go, but what I don't want you to do is look a gift horse in the mouth. So I want to get to a tool we just created today. And I'll give you my expectations of where rates are going to go in a second. But here it is. It's Rate Watch 2.0, actually, we created. And we used to have this where you click the refinance tool. But what we do now is we have this, and it's kind of has AI in function. And I'll be monitoring this daily, folks. We don't sell this data. Basically, what this is going to do is you're going to provide me your mortgage information. And we're going to watch to see when is there an entry point for you to refinance. So let's say, for example, grab your mortgage statement, look at it, and go in here and say, okay, Dan, my rates, 7.25. So when rates get, when they go over here at 7.25, pretty close, or 6.25, hey, reach out to me and, let's look at the payment, what the payments will be, and maybe the savings, break even point, and things like that. Let's look at the numbers. That's what you can do right through there. If you already have rate quotes, you can upload those right through here, and we can compare those with over 30 different lenders, because I do have a quote that I talk about all the time. It's one application, one credit pool. We're going to compare your loan over 30 different lenders, and I'll explain to you how we do that at the end. But here's my expectations of what's going to happen. The MBS market, it's up 7. This is what we watch. If you're new to my channel, we watch this right through here. This is a mortgage bond that trades on Wall Street. If you don't have access to this, then watch the 10-year Treasury, or just subscribe to my channel down through there. So just when I post a video, watch through it and see what the MBS is doing. This is telling you exactly what mortgage rates are doing, because this is the mortgage bond. Okay, so what you need to understand is up through there, the mortgage bond price is 101.09 right now. That's up 6 cents, basically. Look at it that way. So what you have to do is figure out, well, if the price is up, what does that mean to the rate? What's my interest rate going to do? Well, if the price of a bond, any bond, especially this one, if it's up, well, the rate, the margins or whatever are down. So that means because if it's a mortgage bond, that means your mortgage rate's going to come down. Okay, so an uptick of 6, you get a little reprieve, like you're seeing right through here. So, follow me each day so you can learn that. But if you don't have access to my channel, or you're just watching, headlines, this is where we're going to focus in on right now, the 10-year Treasury. Now, what's happening right now, there's technicals behind the scenes. But if this trades below 7 or 4%, let me go back if I can find if we've been there. We touched it. When did we touch it? The day the Federal Reserve cut rates. So what the technicals are saying is, if we go below 4% and we stay there and close there, you're going to have a bunch of buyers jumping into the market. So this will continue to raise the prices and bring down rates. Okay, so if you might be ready now, to refinance. If you're not, make sure let's go over to the Rate Watch tool and figure out where that is. Again, go to therateupdate.com. Here it is right through here. Be prepared for this. Okay, I'm not saying it's going to happen tomorrow. I'm not going to say it's going to happen in 6 months, but please put your information in here. We don't sell the data, and if rates ever hit where you're looking for them to hit, I'll be reaching out to you personally. So my expectations over the next few days, I don't know where rates are going to go, because I'm just going to follow the technicals. I'll be back tomorrow morning with the economic calendar that's kind of non-existent, but we'll see what other data that we can get provided to us to help us give some guidance on where rates are going from here. So if you're looking to buy and you're kind of looking long-term out, look at a rate at 7% to see, make sure those payments you qualify with. If you're looking to refinance, sign up for the Rate Watch tour. Just give us a call. We'd love to, work with you on that as well. So my expectations are, it's going to be sticky right now. It's going to be day by day. So watch it. Don't miss it. Be ready and be careful. So thanks, folks. I greatly appreciate you watching today. I'll be back tomorrow at the opening bell to hopefully give you a little more guidance on what's going on with rates and the whys behind it. Thanks for watching. If you haven't subscribed yet, we're trying to get to 40,000 subscribers, and we're 1,000 away. So if you can help me get there, I'd appreciate it. Take care, folks. See you tomorrow. Bye-bye.